Well, it's time for Futures in Focus. We're watching gold today. It's getting hit from all sides. The precious metal extending losses as investors seek the dollar and yen as havens instead of gold. We're joined by Paul Nolte from Kingsview Asset Management. He's at the CME in Chicago. Paul, it has really been, not just recently, but over, say, the past year, it's been unusual for gold, even at times when we have had risk-off sentiment elsewhere in the markets. We haven't seen people going into gold. What has changed?
You know, I think it's a realization that, gold is no longer that safe haven currency. It's a lot easier to get in and out of treasuries, the U.S. dollar, and even some of the other foreign currencies like the Japanese yen. It's a broader, deeper market than gold might be. And gold has really been an anti-dollar trade. The dollar has been fairly strong over the last year and a half, and gold has generally been a little bit weaker. We're not seeing the inflationary pressures globally. So again, it's been tougher for investors to put money into gold, to pull out fairly quickly. It's easier to do through the treasury or dollar market.
So do you expect that trend to continue then? Do you think we broke briefly below $1,200 an ounce today. Do you think that then we move more substantially below that level?
It could be, as long as the dollar remains strong. I mean, the dollar's kind of breaking out of its trading range here between 94 and 95 and looking to be a little bit stronger. So I would anticipate gold to be a little bit weaker in the weeks ahead, and certainly maybe even through the end of the year.
Now, I want to move on to oil, because there we've seen some interesting push and pull from the Iran sanctions happening on the one hand. Turkey now seems to be having an effect on oil as well. Concerns about demand from China. So a lot of cross currents going on there. Do you think that there, too, the path of least resistance is lower, or do you think we're going to see a bounce here?
Yeah, it's right now just kind of breaking a trend line that's been going up since July. We could see energy prices higher if global demand continues to be relatively strong and OPEC holds together. Russia over the weekend, or over really the last week or two, has been producing a lot more oil, bringing that to market, which has put pressure on oil. So we can see oil maybe trade sideways for a while, maybe not significantly higher or lower here, until we get through some of those crosswinds and we see whether the global economies are indeed picking up.